top of the Bitcoin bull market? Is Larry Fink the new CEO of Bitcoin, and will we see new all-time highs this year? Today we're going to look at all of this and more, as well as some charts, and discuss what is happening with Bitcoin. Hey guys, Sheldon Evans here, welcome back. Or if you're new here, don't forget to hit the subscribe button and turn on all of those bell notifications. Give the video a thumbs up if you find any of this information useful. So on my display right now, I have the Bitcoin US dollar chart open, and we're going to see what has been happening and why we've been stuck in this range since the end of June. So in the 21st of June, we entered this range and we stuck between $30,000 and $31,500 since then. And right now we're trading at the bottom of that range on very low volume. Now, what does that mean, and why does it matter whether we pump up or down from here based on low volume? Well, first we want to discuss what has caused this impulse or caused this midterm short bull run, and why we're trading within this level and not really pumping above it or breaking down right at this moment. And one thing I do want to look at is when Binance launched their spot trading, their fee-free spot trading in July last year. So we'll take a look at the chart and see what happened around that time. As you guys know, there's a lot of FUD around Binance right now, with good reason, as it's very good to be skeptical in the crypto space. With all of the stuff that's happened over the last year, from exchanges collapsing being the number one thing, it's very obvious to be good, or at least skeptical, and play both sides of the coin, play devil's advocate when it comes to assessing the situation and seeing who's holding your coins. As always, you guys should know self-custody is the best. Keep your coins in your pocket. Don't let anyone touch your coins. The big bad men want to touch your coins. Don't let that happen. Keep it safe. But let's look at the chart and see what's going on here. So in July last year, you can see what happened. We sort of had the huge crash down, and when we made new lows in November. But during this region, you can see there's a huge spike in volume here. Especially if you go to the weekly chart, you'll see that we had a huge amount of volume during that time. And of course, maybe that's because people were capitulating and there was a lot of volume, a lot of people selling. Maybe the big guys were accumulating. Who knows what was happening at this point? But it does coincide very well for when the zero fee trading was announced on Binance. Now, why is that important to note? Well, zero fee means it's very easy to trade between Bitcoin and other pairs, and you don't charge anything. There's no fees, meaning that anyone can do that, even the exchange themselves, meaning that there's very high likelihood or high potential for manipulation there, meaning that the exchange could have been wash trading and just creating volume for no reason to make it seem as if there was a lot of interest in crypto, make it seem as if they were the biggest exchange. There's a lot of optics here that can work in their favor if there's obviously a lot of volume on the exchange. It means maybe they're good, maybe there's some legibility there. It means that they're a pretty good exchange, so people want to trade there. And that's an interesting thing to note, that we did have this lot of volume, right? But as you guys know, there's a lot of FUD around Binance right now. There's a lot of regulatory pressure on them and the whole of the crypto space. And what have we noticed? Well, of course, a huge decline in volume. Now, this volume is back to, let's say, regular levels prior to this zero fee trading point. And maybe that's something to note. Maybe it's not of any significance, but it is something to keep an eye on, which is why I'll also discuss something else in a second as well and see where the price of Bitcoin is going. So also on my chart right now, you can see that we're at this level, right? We got rejected from that huge resistance that I did mention in the previous video, which is a huge point of confluence and interest that we have from the past year when we did have the breakdown back in June of 2021. So around the $30,000 to $31,000 range, we're struggling to break above that, obviously with good reason, because it is a strong point of interest. Now, why is this also interesting that we're pumping to at least these levels here, but not necessarily going to new all-time highs with all of this institutional interest, right? We've got BlackRock saying that they're filing for ETFs. We've got Larry Fink, the CEO of BlackRock, calling Bitcoin a currency that will transcend any world currency, any one currency. Bitcoin will transcend any one currency, saying that if we look at how it has performed over the past 2 months, that Bitcoin, of course, has to be the global leading asset. It has a very differentiating value versus other asset classes, but more importantly, it's because it's so international, it's going to transcend any one currency and currency valuation. If you just look at the value of our dollar, how it has depreciated in the last 2 months, and how much it appreciated over the last 5 years, an international crypto product can really transcend that. So let's take a look at how Bitcoin has performed over the last 2 months. Well, of course, we've got a pretty good rally from Bitcoin, let's say from the beginning of, or like, let's say mid-May. Of course, we've had a pretty good rally, 24%, maybe even 17%. That's a pretty good rally for an asset. But what else has moved this way? Well, pretty much everything else, if we look at what happened to the dollar index. So as you guys know, assets, or at least these charts, are representative of human emotions. And what do humans do? They chase the next shiny big thing. Humans are basically like moths to a flame. They're like crows to a shiny new spoon. They're looking for the new interesting thing, the thing that's going to generate them wealth, right? Now, what has also coincided with the rally that we've had in crypto? Well, of course, the decline in the dollar index at least. So the dollar is down, let's say, 13% from the high on the 26th of September. Let's take a look at Bitcoin, what happened on the 26th of September. All right, 26th of September. Of course, we had the crash. We had one last crash, and since then, we've had a rally. But it's not just these risk assets that we've had a rally in. Let's look at something that everybody hates, gold, the big boomer TradFi asset class that no one really cares about. Okay, so since, let's go back to the daily. We've also had a bit of a rally in gold, right? Let's say since November, let's say this year. Since November, we've had a 11% increase in gold. Now that's a huge increase. Let's say if we just go over the past 2 months, so the beginning of June-ish, crazy 4% gain in gold. Now that might not sound like a crazy amount, but if we really do look at the data or look at what is happening here, you'll understand that they've moved in similar ways. Gold and Bitcoin have moved in very similar ways over the past 2 months. And how can you say that when Bitcoin's up multiple percentages, but gold is only up 3%? Well, of course, I can say that we've had a bit of a move. Let's say up 25% versus 3%. Well, let's take a look at what the difference here is. Of course, overall crypto market cap, $1.2 trillion. Bitcoin, $588 billion. So moving that 25% doesn't take a lot of capital at all, really. If we look at the market cap of gold, $12.9 trillion. For that to move 3%, and for Bitcoin, 1/20th of the size of that, to move 25%, that's not really a major move. It's not what Larry Fink is saying here, that it's the one currency that's going to transcend all global currencies. Yes, I do believe in Bitcoin. Yes, I believe in blockchain. Yes, I'm an advocate for this. Yes, I'm a strong believer in the technology and that Bitcoin could potentially be the world's reserve currency one day. But the way that they use their wording here, the way that they're saying things, is very much to fit their own narrative. Of course, they're trying to get the ETFs approved. Of course, they're trying to pump the market so they can perhaps accumulate lower, distribute higher, accumulate lower. They're trying to fill their bags. They're trying to make sure that they have as much crypto on their balance sheets as possible before everybody else does. And the way they do that is they manipulate the market to the upside and to the downside, as I've mentioned in previous videos, to shake you out of your coins. Now, I'm not necessarily saying that they're out trading you right now, but you have to be very aware of what they're saying, why they're suddenly all in the media, why they're talking so positively about Bitcoin. As you know, Larry Fink has flip-flopped in the past, calling Bitcoin the index of money laundering, and now he's all for Bitcoin. So it's very interesting to be aware of these things, because we have seen, as I mentioned in the previous video as well, the flow of capital through the market hasn't been new inflows into the market. It's been the same capital rotating, and we can see that because this rally has mainly been driven by the fall of the dollar index. And we could potentially be forming a bottom here for the dollar index as well, which if we do see a rally from the dollar, again, it's going to be a decline in risk on assets like Bitcoin. So we could potentially see a further move to the downside there, but we'll discuss more of that in a second as well. Now, why would they be talking at this point in time? Why would they be telling everybody that you need to be getting into Bitcoin right now? Well, they want you to move the market, right? You see that there's all this news right now saying that if this much capital, if only 5% of their capital was allocated to Bitcoin right now, it would immediately push Bitcoin to $300,000 or $500,000. While that might be the case, allocating 5% of their overall capital or assets under management to Bitcoin might move the price that quickly or that fast and that high. Why would they do that? That is the most illogical thing to do, especially as an asset manager. If they want to accumulate, they're not going to accumulate at 60,000, 50,000, 70,000, 100,000, 300,000. They're not going to be accumulating at those levels. They want it lower. They want to get Bitcoin as cheap as they possibly could. So they're going to ensure that the price goes down so they can accumulate at low levels. On top of that, they're not going to be spot buying on Binance. They're not going to Binance and hitting buy. They're doing OTC exchanges. They're buying from guys who are looking to get out at certain prices, maybe even lower than here, trying to get large orders out of the market and transfer to these guys. So they're not going to simply move the market up $100,000, $200,000, $300,000 in one go. That just doesn't make any logical sense. And even if that were the case, the people that are holding right now that have been underwater for a while, all these guys that bought at 50, 60, 70, 80K, maybe not 80K, that hasn't happened, but up to 70K, as soon as this gets near there again, or even up to $200,000, $300,000, you think these guys are not going to sell? They've been scared as hell since then. They're trying to exit the market. So the people who are going to be entering the market have to be either new participants or the long-term holders that believe in Bitcoin, that want to accumulate more. They're not going to be holding on from here to new all-time highs to $1 million a coin. If that were the case, these people would be selling, especially the late entrants in the market, the one that got in from here to here. The latest people that got into the market, they heard about it last. They were the ones FOMO buying. They're going to be the first ones to try and get out of the market. They're going to be the first ones to capitulate. They're going to be the first ones to try and recoup their capital or their losses. So they're going to be the first ones to sell. So the market's not going to immediately shoot up to $200,000 or $300,000. You have to be very aware of that. There is going to be opportunity for you to accumulate either at the current prices or slightly lower, or maybe even slightly higher, but you're not going to miss anything, especially if you're watching this video right now or watching this channel and you're currently involved and interested in the space. You're not going to miss your opportunity. So don't worry if someone's trying to get you to FOMO into the market. A lot of that's going to happen, especially in the coming months as we approach the halving year and post-halving, because that's when your best risk to reward ratio comes in with buying these assets. So please be aware of that. These guys are not going to push up the market. And on top of that, it's not them that are going to push up the market ever. As I mentioned, these late entrants that are coming into the market around this point, this is not the institutions. The institutions aren't buying at this point and pushing up the market. It's you guys, the retail market that is FOMOing in. The reason you can see this is if you literally go to Google Trends and you look up Bitcoin cryptocurrency and you look at where the search interest over time has peaked, December 2017, January 2018, the peak of the market. Oh, what happened during that time? Let's go take a look at the chart. Oh yes, if you guys remember, that was the peak of the previous bull run. Let's go to the weekly. The peak of the previous bull market was December 2017. Okay, let's go back to the search term and see what happened. We had a peak in May 2019, peak in search interest. Why is that? Oh, of course, May, June 2019, we had a peak over there. Let's go back to the chart. May 2021. Oh, I wonder what happened in May 2021. Let's go take a look. Yes, the very peak of the market, right? Let's go take a look at what happened after that. Oh, we had another peak in December and November 2021. What happened there? Oh, yes, of course, that was the second peak. Of course, this is correlating with the market. Why? Because as price rises, more people become interested because they're FOMOing. They're worried that they're going to miss their opportunity. So when they hear in the news, they hear in the media, they hear their friends, their doctors, their lawyers, their firemen saying that they're buying Bitcoin and Bitcoin's going to new all-time highs, they immediately go to Google and search Bitcoin. And that's why it correlates here. Now, the interesting thing here is you have to be aware of this because the rallies, these huge rallies, are usually driven by what? Retail FOMO. Now, if there hasn't been new entrants into the market, we aren't seeing a major peak currently. We did see a small peak back in March 2023, but nothing crazy, which was around here. So we did have the peak there. Maybe this is a double top, similar to here, and we are going to go down from here because the retail FOMO is at least running out, or there's not that much interest in the market right now. But we aren't seeing these huge levels of interest that we've seen in the past that have caused major bull run peaks or tops. Of course, because we aren't near peak or top prices right now. But it is an important thing to mark or be aware of, that this usually does precede or come slightly after the peaks that we've had. Now we are having a slight peak. Maybe this is an impulse or a reaction, dead cat bounce to this previous top here. But we do have a little bit of an interest decline here in Bitcoin as well. So maybe that's running out. Maybe retail FOMO is running out. They did push it up slightly. We had some wash trading going on here with the volume. There was some, maybe the institutions were pushing it up slightly just to get their interest and get the ETF approved and show that they can do this and that they can manipulate the market, or they can protect investors, or whatever they want to push the narrative as. It's just important to be aware that most of this rally has been driven by slight retail investment, mostly by the dollar actually falling. So we haven't really seen true demand for Bitcoin, at least, or true demand for crypto in the recent months. Now, again, remember, this doesn't fault my belief in crypto or my belief in blockchain. All we ever discuss here, especially if you're here for a financial incentive, is we're discussing the speculative side of crypto. We're discussing how the price moves. The price has absolutely nothing to do with the technology. All it has to do is with how the media reacts to an asset. So please keep that in mind. If you do want to be successful in the space, you have to be very aware of these narratives. You have to be very aware of the media. You have to be very aware of what's being pushed and what's being told to you about crypto, about blockchain, about the FUD behind Tether, the FUD behind Binance, the exchanges collapsing, the regulatory pressures. These are all things to keep in mind when only relating to the price. When relating to the technology hasn't faltered yet until we get some quantum computer that can break the hashing algorithm and destroy crypto, we're going to be fine until then. So if you've been around and you stuck around for this long, welcome back, and stick around longer. One last thing I want to discuss is, of course, the XRP news. Great win for the whole crypto space. As you guys know, I'm not a huge XRP fan, but that's irrelevant. What we're talking about here, again, is the impact of this on price. Now, of course, XRP spiked like 90% after that news, and it's a huge win for the entire crypto space. We're going to see a lot more coins launch. We're going to see a lot of exchanges list more coins. We're going to see a lot of this, at least hype, come back into the space because people feel a little bit better here. The regulatory pressure, the regulatory fear was suppressing a lot of the market, but it's not the only thing that was suppressing XRP's price. Now, this is another thing that I want you to be aware of. You always have these huge catalyst events that cause huge rallies in price at certain times in the year. Now, these rallies or these events aren't the only thing suppressing the price. If the price doesn't have a fundamental reason to go up, it doesn't have a speculative reason to go up, people aren't flocking to the coin for some reason besides this event, then what is the next speculative event? What is the next hype event that's going to cause a rally to the coin? If there isn't anything, it's very likely that this will just bleed, at least go down for the coming months, unless of course there's the huge bull run. There's a lot of retail FOMO, because that's the only thing that drives price. If there's one thing that you learned in this video today, I hope it's that you realize that it's only speculative hype that drives the price to new all-time highs. In some cases, there's fundamental value, as I mentioned in previous videos, but most of the time it's just speculation. I hope you guys learned something from this video, and if you did, please give the video a thumbs up. Comment down below, they won't manipulate me. As always, I shall see you in the next video. Cheers.